breaking news out of the European Union, as it appears that politicians are basically passing a law right now that will essentially ban private cryptocurrency wallets, or at least make them basically unusable in any kind of practical sense within the EU, which is dumb legislation. You can always count on politicians to screw up a good thing. And it's insane for the EU to be doing this because the crypto industry is going to be worth tens of trillions of dollars. The countries that adopt this technology the fastest will be the ones to benefit from it the most. These kind of legislations do not help in that regard. Anyway, we'll talk about that in today's video. Also, some good news. It's not all bad news out there. I do have some cool news stories for you as well, so make sure to watch the whole video to get all of the goods. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that topic, you do like staying up to date with what is happening in the cryptocurrency space, a little tap on the thumbs up button to let me know that you do appreciate this kind of content would be supremely freaking awesome. By the way, every single week my team and I make Wealth Mastery. It's a cryptocurrency investor report, altcoin reviews, DeFi, tutorials, token sales, airdrops, NFTs, and much, much more. You can sign up for free using the link down below in the description. Now, let's go ahead and take a quick look at the charts to start off with here today. Price of Bitcoin has been retreating back from the 200-day simple moving average. We got pretty close to touching over it the other day. We didn't quite get there. We just got rejected basically straight off of the 200-day simple moving average. Our line in the sand for bulls and bears, while we remain under that moving average, the market is in a bearish phase. When we flip back over, that'll be a very bullish time for the market. We obviously have not flipped over that yet. In fact, we got a pretty strong rejection back off of it, already falling below our nearest area of price support at $45,500. We'll see over the weekend if we get back down to $42,500, which is our next major area of price support. For Bitcoin, I have put in a bid down there, $42,500. I shall see if it gets filled over the weekend or not. Now, one thing to mention about this whole move upwards, it's been pretty beautiful, obviously, watching the price go up, but you have to keep in mind the volume, as you can see here, has been quite low the entire time. And in fact, some of these moves we had abysmally low volume, like right here. And we've actually seen volume basically falling the higher the price went. So we weren't finding a lot of buyers to keep pushing the price up. Obviously, the Terra protocol, they bought a lot of Bitcoin. There was the hype around that. But essentially, now that we've got up to this point, we didn't really find a lot of new buyers in the upper $40,000 range. The volume was drying up. And of course, now we have the price coming back down. We do have a bit of bid obviously going on here for these lower price points. I did buy some more Bitcoin already today, around $46,000 approximately. And as I mentioned, I got that bid in at $42,500. Now, the daily candle still has time to close above our line of support here. In fact, it's got a lot of time from time recording this video, about 22 hours, to close back above that. So we shall see what happens. But weekends tend to be lower volume periods, I would say. Just tends to be more madness happening over the weekends in terms of price action. So we'll see if we get that $42,500 order filled over the weekend. I'd obviously really like to see this area holding as price support. If we lose that, well, it was fun. It was fun while it lasted. Anyway, so that's the charts, what we're looking at in the charts there. Let's talk about some good news before we get into this EU news. So tomorrow, the 19 millionth Bitcoin is going to be mined. That's a fantastic milestone for the network, obviously. And it means that only 2 million Bitcoin remain ever to be mined. Ever. Remember, it was only 21 million Bitcoin max. Right now, we have around 2 million Bitcoin sitting on exchanges, another 2 million to be mined. Approximately over the next 10 years, we're going to get around 90% of that Bitcoin mined. The remaining fraction of Bitcoin is going to take a very, very long time to knock out of the network, so to speak. But still a pretty cool milestone to see coming up. 19 million Bitcoin will soon be mined. Also, good news from Kraken. They've integrated the Bitcoin Lightning Network. This is another major cryptocurrency exchange integrating with the Lightning Network. If we ever want the Lightning Network to really take off into really big and really get wide level adoption, you have to have these centralized points where people can buy and sell that Bitcoin. Because until we get very easy integrations to allow this to happen, well, it's just not going to get the kind of adoption we'd like to see it getting. So right now, customers can deposit and withdraw up to 0.1 Bitcoin with instant and cheap Lightning Network payments. So this is really great to have that wallet that, you use to buy like a coffee or something like that using Bitcoin. I know you may not want to spend your Bitcoin on coffee. I get it. That coffee is going to end up being worth $100 one day instead of the $5 it costs now. Very aware of that. But if you do want to be using the Lightning Network, promoting adoption, promoting retail adoption, encouraging people to accept Bitcoin as payment, then you got to spend some Bitcoin once in a while. Guess what? Spend and replace, man. That's what I've done with all my Bitcoin. I've spent a lot of Bitcoin on stuff over time. I took a trip to Australia, bought all kinds of stuff online. I've donated money to charities using Bitcoin, et cetera, et cetera. You just replace it. You spend a bit and you replace it. You spend a bit and you replace it. Easy peasy, lemon squeezy. Also, it appears that the luxury fashion brand Off-White is now going to be accepting cryptocurrency payments only in their flagship stores to start off with in Paris, London, and Milan. Pretty interesting to see another company getting into cryptocurrency adoption. Every single company that puts up that sign, Bitcoin accepted here, it normalizes Bitcoin and cryptocurrencies. They're not just accepting Bitcoin, they're accepting a few different cryptocurrencies, but it normalizes how just much of a part of our lives all this stuff is becoming. People stop thinking it's a scam when they see, wow, I've walked down the street and my local cafe accepts Bitcoin. The luxury retailer on the corner accepts Bitcoin. My city now accepts Bitcoin for taxes. I guess I really should look into this thing because everybody seems to be talking about it. Everybody's doing something with it. Probably not a scam, right? So it's pretty cool. Every bit of adoption I am on board for, so there's some nice adoption. Also, it appears that Bengal Energy is going to be using stranded gas wells in the Australian outback to mine Bitcoin. Interesting. We've seen a lot of this kind of stuff happening recently with flare gas. We had Exxon come out the other day saying that they're now using flare gas to mine Bitcoin with. Here's another big energy company saying, yep, we're going to be using some of our gas here to be mining Bitcoin. We see these energy companies having a lot of energy that's either going to waste or is not necessarily in the most retrievable locations and all these kind of different things. And so they're using it, and they're using it to mine Bitcoin. Okay, so that's the good news. See, I told you there's some good stuff going on today. It's not all bad news, but we do have to talk about the bad news now, which is that the EU Parliament has voted to impose KYC on private crypto wallets, which is massively problematic for so many reasons. So, look, if you're using just exchange-to-exchange transfers, so let's say you buy Bitcoin on Coinbase and you send it from Coinbase over to BINANCE, that's not covered by this. If you buy Bitcoin on Coinbase and you send it to your Crypto.com wallet, also not covered by this because those are centralized services. But if you buy some Ethereum on Coinbase and send it off to your MetaMask wallet, you buy some Bitcoin on Coinbase and send it off to your Wasabi wallet or whatever you might have, well, that's problematic. The EU doesn't like that. They don't like people moving money around where they can't see it, right? They want to know where your money is, what you're doing with it at all times, which is a highly problematic. We've seen a lot of EU countries pass anti-cash laws in the past where literally it's a crime to buy stuff with more than $2,000 or whatever. It's just absurd. Or 2,000 euros, but whatever. But it's absolute craziness, some of these laws that have been passed, anti-cash laws. Now, of course, we have anti-private crypto laws. Now, what it's important to realize that if you do KYC your wallet, you will still be able to, use it as you would normally. It's just that the privacy is all gone. Now they know exactly who you are and how much you have in your wallet. More problematically, my immediate thought went to, so you're telling me we're going to have a centralized database somewhere that links people's Bitcoin addresses, other cryptocurrencies, let's say Bitcoin addresses, over to their driver's license, their physical address. So if you got $1 million in Bitcoin sitting in your Bitcoin wallet and this database gets hacked, and you know it's gonna get hacked. They always get hacked. Every centralized database, if it hasn't been hacked yet, it's going to be hacked. It's just a matter of time. So they get this database hacked. Everybody in the European Union who has any crypto suddenly has all of their information leaked on the dark web, telling the hackers and criminal gangs exactly where you live, who you are, and how much crypto you have. It's dumb. It's a dumb law, EU Parliament. Absolutely dumb law. But this kind of stuff has been brewing in the background for quite a while, unfortunately. These kind of KYC laws have been being proposed for a few years. The Financial Action Task Force, or the FATF, those guys have been working on this for a while, pushing countries to push these exact kind of legislations that'll make it so difficult to, enjoy privacy with crypto. Now, Brian Armstrong, the CEO of Coinbase, weighed in on this with some really good thoughts. I want to share some of those with you here. So he said the latest draft by Parliament of the Transfer of Funds Regulation treats crypto and every person who holds crypto differently from fiat. Right? So if you have cash in your wallet, you don't have to report that cash in your wallet necessarily, but they want you to do that with your crypto. Every crypto transaction, not just those with a €1,000 threshold, would be travel rule eligible. See, this travel rule thing, this is exactly what I'm talking about. This is what the FATF has been pushing for a few years, that they wanted the travel rule to be applied to every single cryptocurrency transaction, which means that you need KYC on both sides. So whoever sends you crypto, that needs to come from a KYC'd wallet. If you send crypto, it has to be to a KYC'd wallet. If you withdraw from an exchange, it has to be to a KYC'd wallet. So as Brian says, this means before you can send or receive crypto from a self-hosted wallet, Coinbase will be required to collect, store, and verify information on the other party, which is not our customer, before that transfer is allowed. So if you want to buy Bitcoin on Coinbase, send it to your mom in another country, right? What if your mom lives in a country like Russia, but my mother-in-law lives there. What if she lives in a country like that? Or what if she lives in a country like Lebanon, where you have these capital controls and you have difficulty in verifying, as you have, sanctions, and you have people who are cut out from the international banking system, all this stuff. So suddenly it becomes very, very tricky to do. It's very, very problematic. So Coinbase needs to collect the information on that person as well as you. Moreover, anytime you receive €1,000 or more in crypto from a self-hosted wallet, Coinbase will be required to report you to the authorities. This applies even if there is no indication of suspicious activity. Think about €1,000. I know €1,000 is a lot of money to a lot of people in the grand scheme of things. €1,000 isn't like, a mind-bending amount of money. So somebody sends you €1,000, they have to report that transaction to authorities. You're immediately assumed to be some kind of a criminal person who should be, you need to be looked at in a suspicious way. It's terrible. It's terrible, terrible law. And you think about the absurdity of all this, right? They're treating regular people who are moving around €1,000 or €10,000, whatever. That's not crazy amounts of money, like criminals. Meanwhile, London has been the epicenter of money laundering for decades. Trillions of dollars have been laundered through the front door of the bank in London, New York as well, Switzerland. A lot of these big European cities, the big banking hubs, have been responsible for disgusting amounts of money laundering for the worst people, for the biggest thieves and scumbags on the planet. And yet you, with your €1,000, you're the criminal, or at least you're treated like a criminal by law. Brian goes on, imagine if the EU required your bank to report you to the authorities every time you paid your rent, merely because the transaction was over €1,000. Some police state kind of stuff. You got to remember, crypto is going to be everywhere, and it's going to be completely ubiquitous in our lives, and yet this is the kind of laws that are being passed. He said, or if you sent money to your cousin to help with groceries, the EU required your bank to collect and verify private information about how your cousin before allowing you to send the funds. How could the bank even comply? That's right. Compliance is going to be a major issue for these cryptocurrency exchanges. He says this eviscerates all of the EU's work to be a global leader in privacy law and policy. It also disproportionately punishes crypto holders and erodes their individual rights in deeply concerning ways. It's bad policy. I completely agree with what Brian is saying here. This policy, unless it gets changed, literally means that the EU is going to be putting themselves back in time when it comes to cryptocurrency legislation. This does not move them forward. This does not help them capture that multi-$10 trillion industry that it's going to be by 2030. I mean, crypto's going up to be worth tens of trillions of dollars in the next 8 years. The countries that adopt it aggressively now will capture the most from that economically. The EU saying, well, we want to try and make it as difficult as possible for exchanges to comply, as difficult as possible for decentralized finance and decentralized lending, people with NFTs, people playing games, people trying to send money between themselves and their friends and their family. We'll make that as hard as possible to do. Bad policy. Bad policy. I hope something happens about it, but that is where it is right now. Anyway, all that craziness happened. I'm just going to keep on stacking some sats. That's my final thought for the day. You'll let me know what you think about this story or any of the other stories I covered in today's video down below in the comment section. Thanks so much for watching today's video, and peace out till next time.